Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Thursday, February 22nd, 5:23 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, uptrend continues. Next leg up started today. Nice rally since the follow-through days on November 1st and 2nd. You can see the trend gauge over here. We're back to the coveted 4 green arrows, the yellow sub arrows showing weakness, short-term weakness in leaders, and NASDAQ 100 with a close below the 21-day moving average. Those have been swept away as leadership reasserted itself today, as did the NASDAQ 100 on the back of a huge move by NVDA on its earnings report. So back to all 5 of the major indexes trending on all 3 time frames that we track. That equals green arrows. So what happened today after hours? NVIDIA, after hours last night, NVIDIA, when I did the video last night, was up about 8%. Just kept going as the conference call went, and after hours, and at the open, and during the day, and closed the day up 16.4%, and is up another $5 after hours, and that fueled a big rally in anything AI tech related, taking the S&P 500 and the NASDAQ 100 to all-time high closes. Not quite an all-time high on the NASDAQ 100, but all-time high close. I think it missed an all-time high by like 2 pennies. So here are the numbers. The big 7 rocking on the day. That's not a misprint, up an average of 4.44%. Even if you exclude NVIDIA, the other 6 up an average of 2.45%. So it was a big tech rally. RG8, our 8 growth ETF composite, up 2.2%, led by FFTY. That's the IBD 50, and this is again another reason why we took away that green arrow. This is 50 leading stocks in the IBD 50, up 4.46% on average. So not on average, the index. So I think it's equally weighted, but good day by the leaders, no matter how you slice it. S&P 500 opened up 1.3%, rallied for 6 hours before basing into the close, up 2.11%. Equal weight, not as good, not even close, but still up 1%. NASDAQ 100 up 2.9, equal weight up 2.3, Dow up 1.2, mid caps 1.5, Russell 2000 up less than 1%. Breadth was not that good today. This was basically a big tech or big 7, big cap tech AI type rally. In fact, several times during the day, the S&P 600 small cap was red, even mid-afternoon. Global 60/40 stock and bond up 1.1%, in-house GROTECTION up 2.43%. Let's get into it, and we'll start with, well, here's the small cap chart. You can see IWM. It gets out of sync with the Russell 2000. I'm not really sure why, but it shows up 0.76%, but the quote I have on the index is up 0.96%. Sometimes it just depends on where that last tick is, but approaching the 200 level again after bouncing off the 50-day moving average yesterday. Step back and look at the weekly on this, and we've just really been basing for going back to mid-2022. This has a long way to go higher. If it wants to, if the market scenario is right. So the high here was on, November 2021. So we can go much higher on small caps if the environment is right for it. But definitely being dominated, obviously, by big cap tech. Here's the S&P 500. You can see the breakaway gap. We can draw a little declining tops trend line here, and we broke back above that after bouncing off the 21-day moving average. And yeah, that's bullish, folks. I don't know what the bears are smoking if they're still engaged. And same situation here, breakaway gap on the NASDAQ 100 above this declining tops trend line with relative strength today. So yes, relative strength has not confirmed, but when this plays catch up, it catches up quickly. Would not be surprised to see next week the relative strength line making a new high, confirming price. We don't predict. I said I would not be surprised to see. We're always open to anything here at Revere. One thing we know is that Um, Geez, anything can happen if you've been involved in you assume nothing when you're involved in the market. Dow Jones Industrial Average breakaway gap, also relative strength line still weak. Mid caps uh, breaking back above this flat base, which was a high handle off of this cup. So good stuff there. IWM, we already showed that. Let's go to the VIX, back where we want it. Below that 15 level, below the 200-day moving average, still above the 21 and 50-day moving averages. So there's still room for improvement there. The dollar didn't do a whole lot today. Let's look at a 5-minute chart of this. This is an odd spike. Hard to tell if that was yesterday, but it looks. As I was monitoring all day, it wasn't really moving much. Let's look on a daily chart here. I'm not sure that that spike down is actually valid, but it didn't really seem to impact stocks one way or the other today. That's the dollar. Gold stocks hammered down 2.46%. Gold was basically flat. Bitcoin bouncing off the 8-day exponential moving average up 2%. Let's flip to bonds now. Broad bond index, tight range today. There was some bifurcation as shorter term bonds were flat or slightly lower. The TLT price was higher, meaning the yield dropped a bit. Here's the TLT. Here's the TYX. This shows the yield pulling back a bit, and TNX, the 10-year, basically unchanged. So let's go to the tail of the tape. You can pause this. I'll hit the highlights. NVIDIA crushing AI, crushing ER, sparking the AI rally. Just repeating it again. A little bit of update here on the stochastics. And the RG8 went from negative to neutral, just small caps negative on the stochastics on the big indexes. Day count up 1, same with the 8-day exponential moving average, 32 days trending on the S&P above the 21-day moving average. All tech stand out today, XLK, SOX, and um, software. Bonds mixed. On the downside, utilities, XOP, that's oil exploration, and solar. The only trade we made in-house today was to get rid of our SQQQ hedge, putting our beta at 1.08. Bottom line on the day, NVIDIA fuels AI tech rally. NASDAQ 100 and S&P back to all-time high close. Before we look at some charts, I wanted to discuss a profit monitoring tool that we use. We call it REBAR, Revere Estimated Balance at Risk. Basically what this shows, it's since the beginning of February, uh, how much have we rallied off the lows since the follow-through day? I say we, meaning GROTECTION primarily. And what do we have at risk on our open positions? So what you want to see here is this climbing steadily, not necessarily making a new high every day, because as we raise our stops, if we've got the 21-day or the 50-day moving average, we'll raise the stop a little bit each day. But you want to see the floor rising along with your profits, and your balance at risk will go up or down depending on whether the market's pulling back. As you get closer to the stops, the balance at risk will reduce. And the floor, you want to see this going basically from lower left to upper right. So you look back at the beginning of February, the profit was 19.55%. We had open balance at risk of 6.9. So the floor, in other words, if all the stops were hit right away, our downside, we still would end the rally with a 12.65% gain. And then just green means we're making a higher high on the balance at the end of the day and the profit in the portfolio since the follow through day. Calculate the balance at risk, and this brings the floor up. And you want to see the floor either staying near the highs or slowly grinding up. So you can see from 12.65 up to 18.23 on the floor. So if all of our stops got hit tomorrow, that's the gain that would be locked in from this rally. So that's a tool we use to monitor. We're about a smooth equity curve here. We don't look for grand slams. That's why we keep that big ballast in the SSO. It's surprisingly difficult for a lot of stocks to beat the SSO, even or SPXL for that matter, or QLD or TQQQ. But So you really need to focus on the best of the best, like NVIDIA, to get the kind of returns that you need to beat those leveraged ETFs. So let's go to a couple of charts here. We'll start off with the champ, NVIDIA, up 16%, as I said on the day. You see the breakaway gap there. SMCI is trying to argue with the people that said it put in a climax top and reversal, as it held the 21-day moving average and was up an amazing 33% today. SMCI, AMD joining the chip party, up 10.7%. CrowdStrike bouncing back very nicely after being down on Palo Alto, regaining the 21-day moving average, up 6%. Our, touching on our other holdings, Lilly up 3%, regaining the 8-day exponential moving average. Uber up 2%, but closing in the bottom of the range here. So I mean, it's not an AI stock. It's a leisure services stock. So what else stood out? Nutanix with a big day today. After one close below the 21-day moving average, we saw a lot of leaders the last couple of days get below the 21 and reclaim it today. So we'll be sorting out the wheat from the chaff as we go through our watch list. And anything else big standing out? Synopsys, SNPS, big gap up on earnings, but closed at the low of the day, up 6.8%. So that's kind of unfortunate. That's not the reaction that you want to. So the day before, VRT, with a disappointing earnings report, regained everything that it lost, thanks to NVIDIA, up 7.43%, as they provide the liquid cooling for the data centers that are being run by these NVIDIA chips. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. Feel free to post a comment on YouTube. We reply to all of them. If you're interested in becoming a client, reach out to my partner, Dan Stewart, dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Reminder, our flagship portfolio is called GROTECTION. We grow assets in uptrends, protect them during downtrends. Common sense approach. They say on Wall Street you can't do it, but we feel we've proven that you can. And if you're interested in this common sense approach, by all means, reach out to us. And with that, I'll wrap it up for Thursday, February 22nd. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.